Welcome, dear traders. It's me, Kate Stichina, and you are watching a recap of the Asian session. Last Friday, all US stock indexes closed in the black. Australian shares rose exponentially. Meanwhile, Japanese stocks are falling ahead of a fresh economic data and the Bank of Japan monetary policy meeting, which is scheduled for Wednesday. Japanese investors are rather cautious. Overall, shares in the stock markets are now moving up amid expectations of a smaller rate hikes. In 2022, Japanese shares did not follow the main trend, slightly lagging behind other stock markets. At the same time, the Bank of Japan's monetary policy was rather stable and predictable. As the regulator remained extremely dovish, the yen depreciated significantly, while import and commodity prices soared. In order to boost the yen, the Bank of Japan is constantly buying government bonds. It even widened the target range for its 10-year government bond yield. Last Friday, the regulator spent about 10 trillion yen or $78 billion to purchase another batch of government bonds. However, this approach seems not be working anymore. The 10-year ultra-loose monetary policy in conditions of a high inflation is not effective. Besides, consumer prices in Japan have accelerated significantly. They jumped by 10.2% in December. Haruhiko Kuroda's term ends in April, and investors have already received some hints of possible changes in monetary policy with the appointment of a new governor. The question is whether it's wise to keep monetary policy unchanged until April, given the current economic conditions. Judging by the movement of stocks and currencies, traders are expecting the regulator to adjust the yield rate or even completely abandon its strict control. Therefore, uncertainty is mounting and investors are extremely nervous. This is the reason why they are getting rid of Japanese stocks ahead of the meeting. The yield curve control policy led to a 12% drop in the yen last year. The yen needs to catch up. At the start of the new week, the dollar-yen has already climbed to an 8-month high, testing the support level of 127.30 twice. After that, it weakened slightly, hovering at 128.10. Trading floors in the United States are closed on Monday for a long weekend, so trading is unfolding sluggishly. In the Asian session, the bears tried to keep control of the pair. Nevertheless, bulls prevailed. The pair entered the green corridor of 127.20 and 128.20. Hopes that the Bank of Japan could make some hawkish moves are facilitating the yen's growth. Traders became even more optimistic when the yield of 10-year government bonds rose to 0.51%, again exceeding the target of 0.5% set by the regulator. A sell-off of the dollar-yen pair that resumed in the Asian session pushed the greenback down to the support level of 101.80. After that, the US dollar index managed to recover to Friday's closing level of 102.20. It was trading at 102.40 in the morning. However, the US dollar is weakening across the board. In the Asian session, it was mainly falling because of expectations of the Bank of Japan hawkish steps rather than the Fed rate decision. It appears that the greenback is likely to extend losses. Inflation has been falling for 6 months in a row. It dropped from the June peak of 9.1% to 6.5% in December. It means that the Fed could undertake a small rate hike. Speculators are betting on a 25 basis point rate increase. According to the CME FEDWATCH tool, nearly 93% of traders are anticipating such an outcome. Hence, the US dollar was declining gradually against its rivals on a Monday morning. The risk-sensitive commodity currencies are mostly up thanks to the US dollar's weakness, and the Australian dollar broke through the pivot level of 0.70 for the first time since August. Shortly after, it jumped to the resistance level of 0.7019. However, it failed to consolidate at this high and retreated to 0.6953. Against this background of a steady decline in the US dollar and record high inflation in Australia, fears of an impending global recession have limited market optimism. The Aussie dipped lower to the range of 0.6945 and 0.7021. Yet the bulls do not give up. The Reserve Bank of Australia meeting will take place on February 7. Its results may help them regain ground. However, market participants are still concerned about the situation in China, so they are reluctant to increase long positions on the pair. Fears of a global economic downturn also undermined the upward potential of the New Zealand dollar. In the Asian session, the NZD USD pair climbed to a monthly high of 0.6425. But then dropped to 0.6368. It was mainly fluctuating in the downward range of 0.6365 and 0.6428. And this week, the Bank of Japan meeting and the US retail sales data are in the limelight. They will significantly impact market sentiment, and these events are on tap on January 18. The trajectory of the greenback will depend on the movements of the yen after the Bank of Japan meeting. As you can see, a busy week is ahead. Subscribe to our channel and keep close tabs on the latest market developments. See you soon!